morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE Director of Content, Lawrence Lewitton. Let's take a look at what's going on in the market, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 26,814, up more than 4% in the last 24 hours. Not a lot of reaction to all of this SEC news we spoke about yesterday. We'll get more into that later on in the show. Let's take a look at what's going on with Ether. The CoinDesk Ether price ETX index is at 1,864, up over 3% in the last 24 hours. And DeFi, the DFX, CoinDesk's DeFi index is at 101. Lawrence, Emily, good morning.
Good morning.
Good morning.
A lot of follow-up news on yesterday's Coinbase lawsuit. SEC sued Coinbase yesterday, and the day before, we learned that they were also suing Binance. This morning, Cathie Wood's Arca investment management doubled down on its investment in Coinbase after they got sued yesterday. So I'm curious what the two of you think. Is this Cathie just doubling down on her investment thesis? Is Coinbase still a big bet in the long run?
She sees a buying opportunity.
She had some money left over because she didn't use it to buy, when she sold her NVIDIA stock like a few days before it popped. So she was just kind of like, what am I going to do with the cash? I guess
She did do that.
Yeah. buy some Coinbase. Maybe it's bottom feeding. Maybe it's who knows what. She has an investment thesis. She's going to stick to it.
Emily, what do you think?
Yeah, maybe she just sees a buying opportunity. There definitely are some people like that, including in the crypto market, right? Who just see this as a temporary thing and the markets are going to bounce back. And so they're just buying now. Could be as simple as that.
Yeah, Brian Armstrong came out and said that this could be their opportunity to really get some clarity on behalf of the industry. Maybe Cathie thinks that Coinbase will be able to do that and we'll get some more regulatory clarity and it's just going to be good days in the long run. But Cathie is definitely doubling down on that thesis. All right, let's talk to Nick. The SEC asked the court yesterday to grant a temporary restraining order to freeze assets tied to Binance US. Now, CoinDesk's Global Policy and Regulation Managing Editor Nick Day joins us, who's also the editor of CoinDesk's State of Crypto newsletter. According to Lawrence, that is the best and mightiest newsletter of all time. Good morning, Nick.
Hey, good morning.
All right. Why don't you break down what's going on here? What is the SEC looking for?
Yeah, so yesterday the SEC filed a application for a temporary restraining order, something they hinted at in Monday's filing against Binance. But basically they're saying that they want a judge to freeze all assets of Binance US from being accessed by anyone at Binance Global, including its founder and CEO, Changpeng Zhao. And only allow U.S. people to withdraw funds. And, obviously this is a pretty serious, accusation. The SEC is basically saying they don't trust Binance with access to U.S. customer funds. But also the SEC alleged in its Monday filing that Binance US is pretty much almost entirely owned by, CZ. So, yeah, it's a little odd, right? But basically, the question is if they need a whole new leadership or management team in place, how long is that going to take?
I guess Brian Brooks is maybe he's available.
So Nick, wait, if they're this injunction, like how quickly could it sort of take effect?
So they did apply for it on an emergency relief basis, meaning they are asking a judge to act quickly. We did see Binance's lawyers, show up on the docket finally last night. So I assume they're going to have some kind of a response in fairly short order. But we might see a ruling, in the next couple of days rather than weeks.
And we don't know if there's been an exodus yet from Binance, correct? Or, we're not hearing anything from any customers or the like for the time being.
Right. I think all we've seen is, on-chain data from Monday and Tuesday showing that, there are withdrawals overall in the, entire Binance structure, but I haven't seen anything specific to Binance US. Although I have started seeing some attorneys, not associated with Binance or Binance US, just generally telling customers to withdraw funds, because if Binance has to change its management structure to block Binance global, individuals from accessing funds, it might just take a little bit of time.
All right, Nick, thank you so much for joining us this morning. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for that newsletter, State of Crypto, on CoinDesk.com.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
So continuing on our conversation about the SEC taking action against Binance and Coinbase, we're turning to Kathy Kraninger, Vice President of Regulatory Affairs at crypto market integrity platform Solidus Labs and the former Director of the Consumer Financial Protection Bureau. Welcome, Kathy. So there is so much to unpack with all this crazy news cycle, but let's just start with, in my view, one of the biggest questions, right? Which is that we have two completely different versions of reality here. We basically have Gary Gensler and the SEC being like, just come in and register. That's all I'm asking. It's not that hard. Just do it, right? And then you have Coinbase on the other hand saying, actually, we've tried to do that. We've tried to work with the SEC. You've been stonewalling us. In my mind, it seems like both of these versions can't quite be correct. If you could just break it down for us, like how do you make sense of this? Like, we're living in these two alternative universes.
Well, that's absolutely why Congress acting is so imperative to the future of this industry and the future of financial infrastructure. Those two arguments or conversations are not actually coming together in any way. It's ironic that the SEC announced both of these cases at the same time that Congress is actually considering legislation to address the very key issues around really what the market's structure should look like and how federal agencies should oversee it. Highly unusual for a company that has been the subject of an enforcement action to actually be testifying also. So Coinbase faced that. And I think from that standpoint, worth noting that the cases against Binance and Coinbase are very different. The Coinbase case really is a continuation of the debate that we've been having around what is a security, what is a commodity, which agencies should oversee these markets and in which ways. And from that standpoint, it makes sense that the hearing continued yesterday, and there's a lot more to unpack here.
So you're absolutely right that Coinbase and Binance, they're very different charges. So let's just focus on Coinbase for a moment because Binance has a whole other thing going on. So with Coinbase, right, it seems like at the core of the argument here is that, Coinbase and Brian Armstrong are saying that, like, even if they wanted to register as a securities exchange, they couldn't because, like, they don't fit into any box, right? And I guess the SEC is sort of saying that too, but in different ways. And so you just raised this point about Congress. It seems like if anyone were to create a new box, it would probably be Congress, right? Not necessarily the SEC. But I guess so my question for you is like, what could Congress do to kind of like sort out this confusion? And I mean, putting aside the fact of if they'll actually do it, but like if they were to do something in the near future, what precisely could they do to kind of institute this clarity that we lack?
It really is exactly what they are doing. And we will see. I spent half of my career as a staffer in Congress. I worked in the executive branch with Congress to address some of these same types of issues for other industries. But it is a long road. But they introduced the market structure bill that is joint committee work. It is unusual for two committees to come together and say, look, there are some things falling between our jurisdictions. Let's actually address that. And so the House Agriculture Committee had a hearing yesterday that was really promising, actually, in terms of a bipartisan interest in giving the CFTC spot market oversight for crypto markets and acknowledging that there is, in fact, a gap here that would appropriately be addressed by new authority. Seems the big difference here is how would you fund the CFTC to perform that oversight function? But that's addressable. So that would be a huge step forward, certainly in my opinion and in the industry's opinion. I think the issue, though, is the SEC does continue to be in a position to determine what exactly is a security. But they're going about it through enforcement actions rather than through rulemaking. And certainly Paul Graywall testified yesterday from Coinbase. He has noted that repeatedly, that the clarity that they could provide would be extremely useful, because that's fundamentally the issue. Securities law has a lot of things that goes along with it. There are disclosures that don't quite make sense. There are just communications that don't quite make sense for companies like Coinbase, as they've tried to look at how they could register under current securities laws. And fundamentally, the argument that they have made is that they are not listing any securities, in fact. And having the courts work on this case, but also having Congress provide some clarity would be very helpful.
But just quickly, Congress has had more hearings than I can even keep track of. I mean, it seems like there's a crypto hearing every 20 minutes, So I guess the question is what would it take for them to actually do something, though? Because there's a big gap between hearings and action, and just in the near future, what specifically could you see them actually doing, before, say, the presidential election? Because I mean, maybe you're more optimistic than I am, but I just have a hard time imagining them actually doing anything.
Well, I think drafting legislation and having hearings that are concretely about legislation, that is something that, is a moving of the ball forward. I also don't want to underestimate the education process, because I am encouraged. I've now been in this position for 2 years. Congress, and that means writ large membership, understanding what the opportunities are with digital assets, what the risks are. The conversation is more escalated in terms of the understanding on the Hill of the issues, the focusing in on what are the issues that they need to solve, where are the gaps, and an interest in doing that. So I do see something coming out of the House. Now, again, getting that into law is a different conversation. The other thing that they can do is pressuring, particularly the SEC, and a change in the 2024 election cycle may be exactly what that's needed, but to actually engage in rulemaking. Coinbase, of course, is suing the SEC over exactly that, rather than one-off rules made by courts through enforcement actions. Having rules of the road that apply and that take into account the uniqueness of these players and these assets would be useful.
I hate to harp on this, but do you think that Congress can act fast enough? We talk about all of these hearings that we're having, and then we see lawsuit after lawsuit in 24 hours. Can Congress act fast enough to preserve the building that's happened in the U.S.?
So I'm of two minds on that. In some respects, you don't actually want Congress to act too fast. Regulating something or putting rules into place that are difficult to change, where people don't have a consensus or an understanding of what they should be, that's a recipe for even further and greater disaster. At the same time, where there is consensus, where there is a gap and a need, you can see Congress actually act quickly. There are vehicles that have to move every year, from appropriations bills to the Defense Authorization Act. There, of course, is the Farm Bill movement this year, which is, I think, a possibility as a vehicle. I will leave that to the agriculture committees and everyone else. But as they think about CFTC reauthorization as part of that, as they think about spot market oversight, there is that possibility that if there is a consensus and an interest, that would make sense as a vehicle. So Congress can move quickly, but again, where there is no consensus, acting quickly may not actually be the best answer.
So was Coinbase targeted for a reason? Look, there are plenty of other crypto exchanges operating in the United States, trading the same assets that the SEC can call securities. But Coinbase seems to be the best capitalized and the one with the most legal resources. Is the SEC doing this on purpose? In other words, to either force Congress's hands or else to get a court case to decide this for them? In other words, is this Gensler trying to accelerate the process rather than leaving it to Congress and letting things take years and years to do?
So, I suppose the chairman and the staff there know exactly what the motivation is here. I would note, though, from experience that enforcement cases take years. We know that there were Wells notices. Coinbase made them public going back to 2019. So this is not a new fact out there in the ether that the SEC is looking at Coinbase. Also, to your point, Lawrence, deep pockets as well. Where does it make sense to bring lawsuits? Oftentimes, it makes sense to do that to get a big case and to get a big number. And you know, too, that it took the SEC some time to build this case because they knew Coinbase was going to fight back. And that is absolutely been made clear by Coinbase. And so you could come to that conclusion that they actually do want to see the question of securities resolved. I think the last thing I would note is that, at least from the ecosystem standpoint, I'm glad this case is now actually out in the open, that we have the opportunity not just to have assets named as securities, deemed securities in cases that aren't actually on point about whether or not those assets are securities. Like the SEC's case around the Wahi insider trading situation. Just declaring things securities without actually settling that or proving that. That's at the heart of this. And so many people, of course, when those cases came out, said, where are your cases against issuers? Where are your cases against the listing entities? That's where you solve this fundamental question around what's a security. So there is that possibility, though it'll take time too.
So in tying in with this whole issue of timing, and you said you don't know what the SEC's internal workings right now, what the thinking is. Nonetheless, it did happen the day after Binance, the Binance case. And as we've noted, that's a really different case in many respects. Of course, there is the underlying issue about certain assets being deemed securities in both legal filings by the SEC, but the Binance case is so blatant, or at least the way it seems more geared towards the criminal aspects, the fraud aspects, versus the Coinbase case, which is more about securities dealing. The timing of this, though, coming at the same time, does that? What message do you think that the SEC is trying to send to the overall crypto community by doing these things? First of all, they did it before the markets open in both cases, or like early on in the day. What's the purpose in both of these, having it one after the other, if you had to hazard a guess?
It seems pretty orchestrated to send us a message that the SEC is taking action, enforcing. I mean, the chair said it yesterday on CNBC. His opinion now, it seems, is that there really is no need for additional digital currencies out there in the marketplace because the US dollar and the yen and the euro are, in fact, digital currencies. And so that's a clear statement from the chair, and he is the head of the SEC right now. And look, I can say too, as a former regulator and with strong enforcement authorities, going after bad actors in the system is critical. And thankfully, there are most of us out there talking to say, look, this also gives Binance the opportunity to address allegations that have been long talked about their operations. And so, having these things out in the open is good, but very orchestrated signal, and also orchestrated around that hearing, as well as I noted with Coinbase testifying. Look, again, very unusual for witnesses who are the subject of enforcement action to even be considered at a hearing. And so I think Chairman Thompson made the point well. This is exactly why we're having these hearings. Mm-hmm. There is clarity that's needed.
Kathy, you're the former director of the Consumer Financial Protection Bureau. The SEC has come out and said their main mission in all of this is to protect retail. Do you think they're going about this in the right way?
Like, I think it is fundamentally a balance of which tools make the most sense. And I do believe that while you go after bad actors, if you have evidence of wrongdoing and violation of current law, that should happen. But enforcement is not the means by which you establish clear rules for those market participants who want to try to follow them and want to comply and want to offer innovative, new solutions to retail investors, to consumers. That's the part that's unfortunate. And we do see a pretty clear signal from the SEC that they're less interested in seeing these crypto innovations in the United States. I'd like to say that that's not a uniform position across the federal government. It's not a uniform position across governments, because you see people like Adrian Harris and conversations in New York, conversations in California, in Illinois, in Wyoming, in Texas. How do we actually introduce the right balance and have rules of the road that are clear while we encourage this industry to continue to develop and provide the future for financial infrastructure.
Kathy, thank you very much for joining us this morning.
Thank you all. Great to see you.
That was Kathy Kraninger, Vice President of Regulatory Affairs at Solidus Labs. Coming up, a check at how the markets are reacting as the fallout from the SEC's lawsuits against Binance and Coinbase continue.
Crypto markets are inching higher as traders shake off regulatory troubles of Binance and Coinbase. Let's dive in further with Arca Chief Investment Officer Jeff Dorman. Welcome back, Jeff. Glad to have you again. So markets don't seem too upset about what happened with Coinbase or Binance. We saw, of course, the dive in prices after the Binance news came out, but then we saw a rebound when the Coinbase news came out. What's going on? Why this kind of reaction? Two different reactions on similar news.
Well, I think the net reaction is probably more accurate than the knee-jerk reaction, right? I mean, anytime you have any sort of headline, you're going to see algos react, especially when you have thinner liquidity. It's going to have more outsized moves. But I think the net reaction, which is basically unchanged, makes more sense. I mean, this is largely irrelevant since no one really operates in the U.S. anymore anyway. I think we've seen this over and over again in markets, which is how many times can you rally on the same news or sell off on the same news, right? 2020 is a good example. Everybody wanted us to rally every single time a new hedge fund bought Bitcoin. We rallied the first time on Paul Tudor Jones. After that, who cares? It's already been done, right? The first central bank who purchases Bitcoin. Great. Anything else after that? Nobody cares. Or the first government, rather. The same thing with the first corporate, right? The first time MicroStrategy. Great. Huge news. After that, nobody cares. It's the same thing in 2023. Like, we get it. The theme is the SEC hates crypto. We're not going to sell off every single time the SEC doubles down on what we already know. So in a global industry with perfect substitutes and low barriers to entry, every time they target a single product like Bitcoin mining in China or stable coins or any single player like Binance, Coinbase, Kraken, Gemini, you name it, business just goes elsewhere. I mean, that's macroeconomics or microeconomics 101, is that perfect substitutes mean there's no price impact.
We saw some outflows out of Binance. But what's interesting to note, I went back and looked, there has been really much of an increase in users when it comes to DeFi in all of this. I mean, was it already priced in the market? Did everyone just go, look, if you're still in a centralized exchange, you're betting on centralized exchanges surviving regulatory scrutiny. But is that kind of what's going on here? What exactly is happening with people's perception of centralized exchanges, and why aren't they going to decentralized exchanges?
Well, I think there's a couple of reasons. Well, first of all, I'm not sure that's true, right? I think maybe in a 24 or 48 hour window, it's hard to maybe measure that. But if you look at the decentralized exchange percentage of trades relative to centralized, I mean, we're at basically all-time highs. I mean, you go back to 2020, and decentralized exchanges made up less than 2% of total volume. And now you're looking at somewhere around 15 to 20% on over the last couple of months. So it's a pretty big move in just 3 years to basically take that much market share of the overall pie. So if you look at any graph, and shout out to the Block, they have a very, very good dashboard for this. I mean, it's up and to the right and has been for the better part of 3 years. So I think you are seeing more increased usage on decentralized exchanges. And I think most of that is not really necessarily due to users not wanting to use the centralized exchanges so much as it is the crackdown on the U.S. market makers. A big part of these SEC suits is talking about how, especially you go back to the Terra Luna one, it targeted specifically U.S. market makers, and they have largely left the industry. And that is a huge detriment to the centralized exchanges, where live market makers make a huge difference for liquidity, but has no impact at all on the decentralized exchanges. So you're actually just getting better liquidity on these DEXs. So I think there is a real shift to using those. But I think the other thing is there's not really a better choice than exchanges in general. What I mean by that is, if you read through what the SEC specifically said about Binance and Coinbase, amongst other things, they mentioned commingling of assets, right? And they're basically trying to make the argument that all exchanges and brokers need to be separate, and anything else would be commingling, right? Which is essentially how most stock exchanges and brokers are set up, especially here in the U.S. And they're not wrong, right? If you have a place like Coinbase or Binance that's operating both as exchange and as the broker and as the market maker, there's an inherent conflict of interest there. But the problem is it's impossible to adhere to what the SEC wants when you have blockchain finance, which by definition is T+0 settlement. When you trade with blockchain, you really only have three choices on how you trade. One is you hold your tokens at the same place you trade because you need them there in order to settle instantaneously. Two is you use some sort of self-custody DeFi solution, which we also know the SEC hates because that's the whole crux of the custody rule that they're trying to roll out. Or three is you trade OTC and settle later, which pretty much invalidates the whole reason for blockchain, right? Why do we need to go back to this T+1, T+2, T+3 world? So everything out of DC right now is either indicating that they are going to force traditional T+1 to T+3 settlement, or they don't fully understand that blockchain is in fact T+0. So, I think that's really the crossroads here is what's the point of blockchain if we can't settle instantaneously?
Jeff, I just want to circle back on something you just said about the U.S. So I know that you were actually one of the early voices talking about, projects leaving the U.S. and Arca specifically focusing outside of the U.S. So you were very prescient on that topic. You just said, though, that no one operates in the U.S. anymore, which seems like empirically maybe not that true. I just was wondering, what data you have to back up that nobody is operating in the U.S. anymore?
Meaning those that were operating in the U.S. From offshore, 2-3 years ago, obviously they were just pretending not to be in the U.S., but everyone knew they were. Over the last 12 months, they've actually stopped doing business in the U.S. for the most part, right? I mean, they have pulled back. Every U.S. fund, every U.S. entity has been kicked off of these exchanges.
Who are you talking about specifically? Because no one's operating in the U.S. anymore is a very big statement. So I'm just curious, who exactly you're referring to.
OKX, Huobi, Binance, Deribit. All these places have gotten much tougher with their KYC, with their AML, with identifying that it doesn't really matter if you're an offshore fund. It matters who your principals are and where they live. So there's been a couple of choices that every fund and every U.S. person has to make, right? One is you move abroad, which there are a lot of teams, anecdotally, who are doing that, who are moving, if not their entire team, certainly individuals in their team. Or two is you just stop using those exchanges, right? There are services being set up now that are basically acting as middlemen to give people access to offshore exchanges because they've lost access themselves, right? Again, this was not the case in 2019, 2020. It was very easy to get on an offshore exchange. It is very difficult right now. So those that, you look at the Binance case with the SEC right now, for example, everything's from 2018 to 2019. There's nothing recent in there. So what are you going to do? It's the same thing as Tether. Congratulations, you did something wrong 5 years ago. You pay a fine and you move on. It doesn't really affect anything that they're doing today. So my point here is that it's not that there aren't people in the U.S. focused on digital assets and blockchain and crypto. Of course there are, but there's no new business happening here right now. New business is happening abroad, and people in the U.S. who had setups pre 2023 are largely having to change their workflows and changing their counterparties.
All right. And lastly, a slew of tokens were mentioned in both the Binance and Coinbase lawsuits. BNB, Solana, Cardano's ADA, Polygon's Matic tokens. They are all alleged to be securities in both of these lawsuits. Where do they stand now? What's your outlook on these tokens?
I don't care. It's call them all securities for all I care. I mean, there's nothing illegal about being a security. We trade securities all the time. We trade stocks, we trade bonds. It'd probably be better off if you called everything a security. But if you're going to do that, the SEC, if you're hell bent on calling everything a security and being the regulator for them, then you have to make it cheaper and easier to get licenses to trade and issue them. I don't share that view with others. I'm sure people who are issuing tokens obviously don't want them to be called securities because then it's going to be much more expensive for them. Those who have exchanges that allow you to trade them don't want them to be called securities because it invalidates their entire business model and will force them to go through hoops of licenses and paying fees and all that kind of thing. But for those who actually invest and buy and trade this stuff, it's irrelevant. We trade securities all the time. There's nothing wrong about it being called a security. It just means that it's impossible to do anything with right now because there's no place set up to trade securities right now.
All right, we're going to have to leave it there. Jeff, thank you very much for joining us this morning.
Sure. Thanks for having me.
That was Arca Chief Investment Officer Jeff Dorman. Next up, the arguments for self-custody in the wake of FTX after this short break. Welcome back to First Mover. This week, CoinDesk is releasing the Consensus at Consensus report, which explores the crypto industry's biggest challenges based on conversations that we had at Consensus 2023. Our next guest is looking at the case for crypto self-custody in the aftermath of the FTX implosion. Joining us now to discuss is CoinDesk Ethereum protocol reporter Margot Nykirk. Hi, Margot.
Hi, it's good to be here with you guys.
Great to have you. Your chapter is titled No More FTXs, Finding the Right Tech and Policies for Self-Custody to Go Mainstream. Tell us about the key takeaways.
Yeah, so the conversation started out a little bit with, after the implosion of FTX, how does one trust centralized bodies again with storing your own keys? And the episode had sort of reminded everyone that if you do choose to self-custody, that you're sort of sparred from the schemes like FTX. But choosing to self-custody also comes, like, users have said that it's nerve-wracking, it's confusing, there's not a lot of backup and self-recovery options for self-custody. So the chapter looked into, and the roundtable conversation looked into, how policymakers can create effective guidelines that help with consumer protections, but also sort of abide or acknowledge the crypto ethos of choosing to self-custody.
You know, after FTX, I think Ledger saw its highest single day of sales. People were rushing to self-custody. Now we have the Binance and Coinbase lawsuits. Do we expect to see this conversation kind of pop up again, or what are your thoughts there?
I definitely think that the self-custody conversation has come back into the limelight. Especially, one of the accusations in the Binance suit is that there was maybe a mishandling of customer funds, and that maybe set up a little bit of like mini PTSD following FTX, but also there's the sheer volume of outflows from Binance and Coinbase over the last 48 hours sort of suggests that there might be a renewed conversation around self-custody. Though, I mean, Ledger and Trezor have had some issues over the past few weeks with their own devices for self-custody, but definitely, like, this conversation is back in.
Yeah, actually, that was exactly what I was just going to ask you. This whole Ledger controversy, and it seems to have blown over for the most part. But do you see that having any kind of material impact on people's attraction to self-custody?
It depends who, and it also depends the range of what users, like what comfortability users might have with storing keys. Like some users might still want to have full control over their digital assets. And what the Ledger issue is it's an opt-in issue. So the device itself still works. You don't, but it just really depends on what comfortability and what level of skill the user has with trusting themselves with storing their own keys.
So what do we know about people who self-custody? I'm always surprised myself over who that I know is doing self-custody. It's always it's just completely there seems to be no rhyme or reason to the type of people who do it. But do we have any sense of that?
Yeah, I mean, so at Consensus there was a survey question conducted that asked participants what percentage they think crypto users are actually comfortable or have the skill sets to self-custody. And from the 170 people that answered the question, more than half of them said that less than 10%, they think that less than 10% of crypto users actually have those skills. And then the next bucket of people, I think it was like around 34%, 35%, said that somewhere between 10 and 30% of crypto users actually have those skills. So the point is, like, the big takeaway is that most people feel that most users of crypto don't have those skills. And so that's why there are a range of options from self-custody to trusting your keys with a centralized body.
Margot, thank you very much for joining us this morning.
Thanks for having me.
That was CoinDesk Ethereum protocol reporter Margot Nykirk. That's it for our First Mover. I'm Jen Sanasi. Thank you to my co-hosts Emily Parker and Lawrence Lewiton. We will be back same time, same place, 9 a.m. Eastern Time tomorrow. In the meantime, you can catch the hash today at noon. You're watching CoinDesk TV.